We all want to find that next tenbagger, but the secret to investing does not just lie in selecting winners. It also lies in avoiding losers. Yeah. So hello everyone, I am Tamandeep and today we are going to explore the stocks that you need to avoid. No one knew better than the legendary investor Peter Lynch on what stocks to avoid. So today we will explore the stocks he told us to avoid. Yeah. So here we go. The first stock that he said us to avoid is the hottest stock. These are the stocks that everyone is singing about, right? Your Uber driver, your friend, that guy from Instagram. Everyone is saying this is the stock. This will go at least tenfold. Never trust that. See, the logic is simple. If everyone knows about the stock, all the plus points have already been cashed in and the value of the stock is already at a stretch. Right? See, so there is no scope for any error. And when that story breaks, and it will break sooner or later because there is no scope of error. So when that story breaks, the stock price will fall and not everyone will have a chance to escape it in time. Yeah. So let's see it with an example. So GameStop was the thing in early 2021, right? Look here. See, it went up in 1 week. You see, just $2 to $3 and it went up here, $80. And in another week, it went down to $13. Now, you can say that you still made multiple fold, right? 3 to 13. But not everyone was able to get it on 3. Isn't that right? Some people got on maybe 16, right? Maybe 20, and then they went down to 13. And think about those who went in on 80, right? These are way too unstable. Always avoid such stocks, right? So the next type of stock, the whisper stock. Shh. This stock is going to be the thing. Yeah. Whenever someone says you like that, always avoid such stocks. See, in India and in many countries actually, some small cap stocks become really hyped thanks to the social media. Such stocks should be avoided. An example can be Brightcom. In 2021, Brightcom practically had a cult of its own, right? Everyone was saying this is the stock. And it went up, but then you see how it fell. You see that? So that's the issue with such stocks. Never listen to whatever people are saying. As we discussed before, the profits are already at a stretch there, right? The price is already at a stretch there. So avoid those. Now, what next? The next is the diversification stock. You see, when a stable company decides to expand itself into a business which is not at all related to their business, it's a completely different business. They usually make a loss and they do this diversification by buying another company at extremely overpriced value. So in 2016, I believe, AT&T, those who don't know, it's a boring telecom company, but it's extremely stable company, right? They decided they wanted to become a sexy streaming company and wanted to compete with Netflix. So what will they do? They bought Time Warrants. So Time Warrants is the parent company of companies like HBO, Warner Brothers, and such companies. And they bought it at a staggering 85.4 billion dollars. Can you believe that? See, so when such companies diversify themselves in this way, they usually don't know how to run the business and therefore destroy the share value. Similarly, in this case, it was a completely different business, completely different culture. And after such a big deal, and as soon as 2021, AT&T themselves declared the defeat. Right? So this happens. Now what next? The diversification we did that. The next something. This is the most tempting stock. See, we have already talked about stocks that someone is telling you to buy, and this also falls into the similar category, but I still am specifying it separately because this is that tempting. Whenever we hear that this is the next Google, next Tesla, next Microsoft, we feel like we are at the footstep of a legend, right? We'll buy this stock and it will go thousand folds, right? Like these companies went. But most of the time, there is no real value in these stories. So we should avoid that. Example can be Nikola. Do you remember that Nikola? So those who don't know, it was said to be the Tesla of hydrogen-based trucks. Think about it, a hydrogen-based truck, long drive truck with zero emission. Sounds a good story. It is that good a story. And alas, it did not have that value in it. If it did, the story would be something else. See, so this is what happened to the stock. People thought it is the next Tesla, they bought it and it went up. It went quite up. It went to nearly $2,000. For a reference, those who don't know how much this means in a stock value, blue chip stock like Adobe usually wiggles around $500 per stock, and this went up to $2,000. You see that? And now it's just a penny stock. See the current value. It's just a penny stock now. So be very careful about this. And finally, the customer concentration trap. Yeah, this is the most dangerous. You see, when a company, no matter how stable it may seem, relies on just one or two customers, that's very bad. Because the day they lose that customer is the day they destroy themselves. An example can be capstone services. See, they around 50% of their revenue came from just one government client. And when they lost that contract, their profit and share price plummet, went down a lot. Yeah. So now Capstone Services was able to survive and is doing good now again, but not every company can do that. You see, so this is something that you need to be very careful about. So there you have it, guys. All the stocks you need to avoid. These red flags told to us by an investing legend are still as relevant as they were 30 years ago. Yeah. And see, the stock market is determined to test your discipline. And if you know which stocks to avoid, you already are a step ahead of rest of the investors. So that's it for today, guys. See you next time. Bye.